Happy Thursday, everybody. Welcome back to Swan Signal Live. We are doing this on Thursday this week because my wife is obsessed with Halloween, and so I promised her that I would hang out with her and watch some Halloween movies tomorrow. But here we are. It's White Paper Day Eve. Tomorrow is White Paper Day, and on Halloween every single year, obviously, it's the 17th anniversary of the publication of the Bitcoin Whitepaper, and we have with us the man who compiled all of the writings of Satoshi Nakamoto. And I have to say, this book was fundamental to me to my understanding of Bitcoin when I was a baby Bitcoiner. I found this book so amazing. It's called the Book of Satoshi, and it's super helpful. So Phil writes about a 25-page introduction to Bitcoin, which is super concise and one of the most well pared down introductions to Bitcoin as a system and as a concept. And then he introduces the writings of Satoshi from the time he published the white paper up until the last forum post that he made. And welcome to the show, Phil.
Thank you so much.
Glad to have you here. All right. So let's first say this, and I just learned this in the pre-show, and I'm excited about it. There's a second edition of the Book of Satoshi now. Could you tell us a bit about it? Why is there a second edition? How do we have more Satoshi material all of a sudden?
That's right. Well, everybody was saying, well, how could that be possible since he stopped, vanished in 2010?
Right.
And the reason is we have to thank Dr. Craig Wright, because the lawsuit that happened to be happening because of COPA, in I think it's a year and a half or 2 years ago, they as a process of going for that lawsuit, two person, Martin Malmy and Adam Back, provided their private email exchange. They made them public as for the purpose of this lawsuit. And so that was quite a lot of more. And in addition to that, since the first publication in 2014, there's other people that also happen to release their private email exchange as well, and that includes Wade Dye,
I think he's
Wade Dye, yeah, and Mike Hearn.
Okay.
And so these sort of basically there's and Alfini was also was published as well by his wife. She released that a PDF to New York Times, I think, and so I included those as well.
Yeah, it really gives you an insight into Satoshi's mind, and I think is a must read or listen to, as I did, for any Bitcoiner. John, how's it going, man?
It's great. I am pumped to do this. Kind of not our traditional markets and news wrap, which we'll do later in the hour. But given the timing, Brady, you had the awesome idea to do something topical over the long term, given that White Paper Day is coming up. And we had a good little laugh right before we hopped on. At first, I thought Phil was telling us that the updates were all related to Craig Wright. And I was like, wait, there's 300 more pages on Craig Wright? Now I understand it. What it is that a bunch of emails were released due to the Craig Wright situation that tell the history of Bitcoin. So anyone out there, it's not 300 more pages on Craig Wright.
Yeah, as Phil said, it's one good thing that Craig Wright has given us.
Correct. Yes, the one single thing.
The one single thing. And it was not intended. So, we can't really give him credit for it. Okay, well, let's talk about Bitcoin history with you, since you've studied all of Satoshi's writings and a lot of the people who were speaking with him. You've gotten to know through the process of compiling and writing both of these books. So what inspired you to do this? The first one published in 2014, pretty early. So you must have been interested in Bitcoin even well before that, I would imagine. So what inspired you to do it, and what did you learn about Satoshi's mindset through that process?
So in 2012 is when I heard about Bitcoin and I started getting interested, and I decided to read about the white paper And then I was a little bit more intrigued about, okay, that guy, Satoshi Nakamoto, created it. Okay. Oh my God, he left after the first 2 years, and when you learn about those tidbits, there's a story over a story, because considering that Bitcoin itself is a major story, but another story is the creator is totally anonymous. We don't know anything. We know more about Leonardo da Vinci than we know about Satoshi Nakamoto. And the only thing that we have is the writing that he had. So I was intrigued and started reading his posts. But, it's not easy to go through and follow the thread and so on to get a context of what exactly he was talking about when he's replying to someone. And that's where I realized that if the fact that he left makes these very valuable from a historical point of view. In 2014, that was, still almost news. But as you know, 10 years later, it's starting to be more historical. Just like World War II, any books about World War II in 1947 was more news than history. But books about World War II starting in 1970 and beyond were more like history books. And so I could foresee that the invention was so tremendous, so mind-boggling, because the people were working since the 80s. I had that in mind. It's like how the way to defeat central banking is basically, and the fact that we are living in a digital world was just starting too in 1980s, but the only way is like we need to have something that is decentralized. But we couldn't do that until Bitcoin came up. And that was just on itself an amazing discovery. So that the fact that all we have is his post, and I was really interested to read more about his posts. And when I read those things, it's like, my God, it's just a couple of things that were fascinating to read. And I understood that many people will be interested as well. And actually the value will increase with time.
Was it always clear to you, Phil, that because the information was there on the forum, was it always clear to you that it really needed a compilation? Was there ever a voice in your head saying, oh, I don't really need to do this, people can just find it for themselves? I think in hindsight, it's very clear that your book provides a ton of value to people, because the average person is not going to go to the talk forums and click through and know where to click next. But was it always kind of clear to you at the beginning, or did you have some hesitations?
When I started trying to traverse through the different posts, first of all, there were different subjects, and sometimes 2 months or 3 months or 5 months later, the same subject will be resurfaced through another thread, another personal post, but a different question, but still related to the same topic. And so these will be regrouped in the same chapter. So basically, it's the chapters are basically chronological. The first chapters related to Bitcoin will be when he published the white paper in chapter 3, and then first question that he has, chapter 4, and so on. But whenever there is a duplication of a topic, then it will be assembled in the same chapter, rather than having 2 different chapters covering the same topic.
That's super helpful. So yeah, everyone listening, Phil did a lot of legwork for you, organizing this content, and it definitely comes across in the book. Speaking of digitized world, Phil, my copy of your book is on the Kindle, but I think I'm going to get the physical copy for the second edition. Go ahead, Brady.
Phil, I actually, for a while, and this is in the height of my obsession with Bitcoin, so I was consuming everything I possibly could, and I think all of us have been there. I would lay in bed at night and just listen to the Audible version. I'd lay there for like half an hour every night and just listen to the Book of Satoshi, and it was riveting to me. I know it's weird, but it's riveting to me. It's not weird to Bitcoiners, maybe to others, but to read, some guy's emails and forum posts, right? But it was riveting to me to go through the whole, history of everything that he was thinking about from the time he published the white paper until he left. And then I'm so excited to dig into the second edition.
Likewise. I think I've got one more question before I pass it back to you, Brady. Phil, was there anything that, you were obviously pretty familiar with Bitcoin relatively early on compared to the average person, but was there anything when you actually started digging into these posts a lot more that really surprised you, that maybe you said, oh, I thought Satoshi's intent or design was this, but now I'm reading this post and it's different? Was there anything that surprised you?
Well, compared to when I read it, yeah. So not exactly. I would say that the one thing that impressed me is at the time, conversation about Bitcoin versus gold, that kind of topic was not a conversation, and nobody was bitching about gold or about Bitcoin or vice versa. There was no camps, this was so fresh and so new. But nevertheless, he came up with one of the best arguments against Peter Schiff. And that impressed me when I read that. It's a famous post where it says, as a thought experiment, imagine that there was a base metal as scarce as gold, but with the following properties: boring grain color, not a good conductor of electricity, no, not particularly strong, but not ductile or easily malleable either, not useful for any practical or ornamental purpose, and one special magic property can be transported over a communication channel. So it's just like gold, basically, except that it's boring, but it can go on the electronic world while gold cannot. So that is essentially, when you think about it, if there was a metal, really something in the periodic table that was extremely rare, just as gold, but somehow could be transported, just the fact it's a physical metal, suddenly Peter Schiff would not bark about it because, okay, now it's something tangible that you can hold in your hand, but it's irrelevant in a digital world. We're talking about the need for something that is not going to be held and manipulated by a third party. And the fact that we had a need for a third party with gold has led to the ability for governments to take over and to print money or to fool us with currency that is supposed to be tangible and one-to-one ratio with gold, but banking, central fractional reserve banking, and so on, they've all done those things. So now with Bitcoin, that will not be the case.
I agree. One comment before I pass it back to you, Brady. I love that Satoshi. That's probably my favorite one, just because it hits on monetary history at its core.
Yeah.
And the way I've always looked at that, and then my add-on to it is, what market participant would have said, oh, I don't want the real underlying money, I want the fractional reserve bank IOU token. Right. No one would say that, right?
Yes.
If gold had different properties.
Yeah.
Yeah.
Exactly.
So you've gone through all of these forum posts, and I was just wondering what were the dynamics of this community, this early Bitcoin community that were discussing this thing that had so much potential but was still so new. What were the dynamics like, and who were some of the other characters involved besides Satoshi that you found interesting?
Well, he had a conversation with different people, obviously, and some will be Gavin Anderson is one of the well-known, is the fact that he passed the torch to him. And what I found interesting is that he was not happy that Gavin went to had a conversation with the FBI or CIA or whatever.
The CIA. What the heck was up with that?
Yeah. And then that's, it's almost like, okay, and it's and then you had on top of that WikiLeaks that came up, and those things came up, and he passed the torch. Yeah.
Is that when he had the quote, "The kick the hornet's nest"?
Yes.
Quote.
And then he had another post about the release, and then that's it. That was it.
He was gone.
Yeah.
Scared him away.
Yeah. Well, but I think some might argue, would he have stayed if there was no being kicked,
Right.
or I believe so. It was just a matter of timing. And it was the greatest gift of decentralization because he decentralized ownership by going away and not showing up at all. And that is actually, compared to Ethereum or pick any of those things, the founders are still there and they're still involved with their project. And while Bitcoin is really, truly everyone's source code, everyone's project, the fact that Satoshi is not there anymore, by going away, he relinquished it to the entire world.
Yeah. So who else, was there anybody else who in those forums where all the conversation was happening who would tend to push back on Satoshi, who might have frustrated Satoshi at all?
You're asking, you've read the book, maybe maybe you have a case in mind, because I mean, the very first post, the very first I think it's chapter 4 is the very first question that he has to answer, and that is James Donald. It's like he's talking
right
about,
out of the gate.
Yeah, that's right. The very first question is, that it's not going to scale.
Yeah.
And which is funny when you think about it. There was no concept of Lightning Network and so on. And what is interesting also to remember is there were 2 months between the time the white paper was released and the source code was published. So all the conversation that was for that window of 2 months was strictly about the content of the white paper. Strictly, they did not. Anybody asking question, they have not seen the source code yet. So that was, and they didn't see it operating. Okay, is this guy, just writing up a white paper, but he hasn't done anything that makes it work, and then suddenly, you see the real proof when the source code is released, the blockchain, the Genesis block is published, and then suddenly now the first mining nodes are operating and so on. So that was an interesting insight when you think about this 2 months window.
Yes. Yeah, and I think, if those people had some precedent in mind, I think Weidai's B Money and Szabo's BitGold were just published as concepts, as white papers. There was never an implementation of them in code.
Yeah.
So it could have been, okay, here's another idea.
Yeah, it's
Right.
interesting, but can you actually make it work? Yeah.
Yeah, and I think Satoshi said something like that, like before he published the white paper, he's like, I had to write it in code to see if it would work before he announced it, but he wasn't ready to publish it for a couple more months. But he did say something about having worked out the code before he published the white paper, I think.
Oh, yes. We have those tidbits that gives us an idea of the pre-white paper era, basically. And the other thing that people discovered is that the Bitcoin.com website was registered something in August of that year, something like this. So people have done some extra research trying to find out. And obviously it was registered in a way that it would not be discovered who actually created this account. So
yeah,
that too was cool to see.
That's fantastic. Next question. Maybe it's a tough question because it does get into Satoshi's motivations. Do you think his ultimate motivation was like the economic angle, like this kind of curiosity and saying, I'm kind of in the Austrian school, and I don't like this existing system, so I want to build an alternative system. What if you try to describe what were Satoshi's motivations? How would you do that?
So he never said anything about himself in terms of from a personal level, but we can derive pretty much that he's likely and was an Austrian School of Economics kind of perspective. Pro gold, pro silver that was the only angle that we had before Bitcoin. but everybody understood. I did when invested in gold, silver. It's like it's all good, but we're in an electronic world, and that means we'll always need to have some sort of a third party in some way, either a government or private banks or any kind of organization that will operate this digital world that is supposed to be matching tons of gold, or X amount of golds. So that was how do you go now that we're a fully electronic world, almost fully. How do we handle being able to disrupt the central banking system and the fiat currency, and how can we do that from an asymmetrical perspective in an electronic world without having a third party? And I think that was his core justification. It's been the core justification of the people in the what are they called again? Sorry. Cypherpunks,
yeah.
Cypherpunks, sorry.
Yeah, it's all good.
So these that was their goal since the 90s, early 90s. It's like, okay, how obviously bandwidth, the internet was not as what it is today, but they still tried to figure out a way to handle these. And we had those little piece of discoveries, just like Hashcash and all that were wrapped up together with Bitcoin. So it took time, but the discovery was there. Eventually, we have it.
This is a small one, but it is something I found interesting, and I think it's just a matter of time zone. But most Bitcoiners say White Paper Day is October 31st, right? And I think you know what I'm going to say here. In the book, it shows the first post as November 1st, but is that just because it came from someone's display across the pond or something like that?
UTC time.
Yes, yeah. Well, the question is, where in the world was Satoshi when he posted those things and posted the white paper? And was he in Eastern and Western USA or in Hawaii? Or was he in Japan? Yeah, I'm saying those two things, where, there's 5 hours difference between Japan and Hawaii, but with plus 1 day. So we don't know exactly where he was, and therefore, was it October 31st at the time he posted this, or November 1st? We don't know. But we could place it at UTC time and say, okay, it's November 1st based on UTC and so on. But yeah.
That is interesting, though. Saturday, the 1st of November, 2008, 1666.33 at minus 700. So I think that's probably minus 700 is in the United States.
Yes.
If that's the time zone.
Well, you're looking at the book?
Yeah.
Well, that was Eastern. Yeah, but I think the way I grabbed those things is I was on the East Coast at the time in Raleigh. So it was the time zone at that time. Yeah.
Got you. Okay, makes sense.
From the perspective of
are
East
we
Coast.
Celebrating on the wrong day? What is going on? I feel like
all depends on where he was.
I feel rug pulled. Like Christmas is on December 26th. I don't
know. Yeah, where was Santa on December 25th?
Where was he? I don't know. Time zone. So again, 27 years tomorrow. We're November 1st. I don't know. I'm gonna figure that out. I'm gonna ask chat, and chat might dig into it and know. So is there any have you read it recently? The white paper?
Yes. Not recently, no.
Yeah. But since I was just wondering if there was anything, well, if not, then maybe what is one of the concepts from the white paper that really hit you as, as a layperson like myself, a non-coder, a non-systems engineer, that hit you as important or genius or interesting or whatever, that was just kind of like a light bulb moment for you?
Yeah, well, the fact that he actually did some calculation of probabilities of in terms of what was it again? The attacker. Yeah, that's right. The attacker success probability of what was it again? Trying to generate an alternate chain faster than the honest chain, and yeah, that's right. How much lucky do you have to be able to be as a single person being able to win all over, even though it's like not the 51% attack, but it's like almost like a 51% attack, but you're actually a single person doesn't have 51%, but you're just lucky enough that you have a bunch of blockchain long enough to defeat everybody or fool everyone.
Right.
And that is, you put those probabilities. That was interesting to me. And he briefly talked about privacy. Obviously, it's all about, private key, public key being published. Everybody sees the Bitcoin address, but they don't know who owns them unless eventually anyone released this. Then suddenly, everybody knows when you're moving those things. And which brings me to so many corporations and whatever, that are supposed to Michael Saylor's business. What's the company again? Sorry.
Strategy.
Yeah. They could publish, here's the Bitcoin address where we're holding all of our keys. It's like, okay, now it's everyone can actually do some the auditing, basically, visually, confirming the auditing, not just their CPA. That's something that I think it will be useful, and they should. Every company who's doing this, or even ETF, they should all do those things. So at least, okay, you're indirectly people holding those ETF, for example. They might not. Might be a million miles away from the private keys by owning ETF, but at least you would know. Okay, here's the Bitcoin address there, where it's supposed to be held, and I see that there's that many shares tracking for that many Bitcoin and all that. At least there's a possibility of transparency that they could do. Right. Yeah, I'm a little bit off topic from what your question was, but
that's great.
That's the kind of thing that I see. that I just see. But the other thing is well illustrated. When you look at the white paper, how it was published, how it's very professional, typical, academic literature in the way it is presented.
Yep. Yeah, it seems like it's somebody who has an academic background or experience for sure, research background.
Yeah.
So what is there anything? And this might get into your favorite post, but is there any post that when you read through them, you said, "Wow, Satoshi's just operating at another level"? If you want to answer that by highlighting your favorite post, you can, or answer however you'd like.
Yeah. The other thing that impressed me, and that might sound silly, but as a software engineer background, I was not actually aware of the Byzantine generals problem. And I think it's more of an academic problem. While I'm not a PhD guy, so I've never learned about those things that are. But the point is, the general problem is, which is in chapter 13. It's fascinating to see that there was a conversation again with James Donald regarding this, and basically, it solves the Byzantine generals problem. And that was fascinating for me, first of all, to learn about the problem, and then to discover that, and essentially that is the case. What it is like if you have the three generals who wants to attack a city, and they have to coordinate, okay, we'll attack tomorrow at 8 a.m., for example. Now, you want to send a message to the other, but you don't know if the message will be intercepted or not. So the other person, they have to reply back, yeah, okay, I got it. Tomorrow at 8 a.m. we'll be there. We'll attack all at the same time. If only one of them attack, they'll be crushed. For all three needs to go. So then the other guy who sent the message saying, I'll go, they're afraid, well, if that message was intercepted, you won't see my reply, therefore you will not go attack because, I never got a reply. And so knowing this, the other guy who sent the original message has to, yes, I did receive your message, and that will be ping pong all the time. It's never ending. While if you had a blockchain, then everybody after six blocks, everybody will be confident that everybody saw the message. It's fascinating to see. That statement is a networking for establishing a networking problem of how a decentralized system will never be able to fully be aware that everybody is aware of the latest state of a project or something, while with what blockchain we're able to.
That was a really great summary.
That was chapter 13 for anyone following along.
Yeah, if you want to open your hymnals to page 69, I'll do a reading from the Book of Satoshi, chapter 13, page 69. The proof of work chain is a solution to the Byzantine generals problem. I'll try to rephrase it in that context. A number of Byzantine generals each have a computer and want to attack the king's Wi-Fi by brute force, forcing a password, which they've learned is a certain number of characters in length. Once they stimulate the network to generate a packet, they must crack the password within a limited time to break in and erase the logs. Otherwise, they will be discovered and get in trouble. They only have to have enough CPU power to crack it fast enough if a majority of them attack at the same time. So they don't care when the attack will be or when it will be, just that they all agree. And it's been decided that anyone who feels it will announce a time, and whatever time is heard first will be the official attack time. So the problem, however, is what Phil just described, is that the network is not instantaneous. And if two generals announce different attack times at close to the same time, some may hear one first and others hear the other first. They use proof of work chain to solve the problem. It's pretty great. Mm-hmm. So that was one sort of piece of genius that Satoshi discovered or invented, and it had been around for the entire history of computer science, or at least network age.
I think was stated in the 1970s by a PhD professor.
Yeah.
That, this was, oh gosh, this is unsolvable. At the time, it was considered a unsolvable problem.
Yep. I would say it's the other piece. Satoshi assembled a lot of work from the cypherpunks over the decades, and from computer scientists over the decades. The peer-to-peer networking system from the Napster era, right, was a big piece of it for the network. Hashcash from Adam Back is cited in the white paper, and some other stuff too, some cryptography stuff. So it was solving proof of work in the Byzantine generals problem. And then to me also, the difficulty adjustment was just a piece of genius.
Yes.
And that's how do you limit something digital to a certain fixed supply, and you have to have the difficulty adjustment to do it.
The difficulty adjustment, you had the insight to know that the number of computers joining the mining will drastically, I can say that in bold, flashing, drastically change from when he started. He was, just a single person, and eventually two, counting him and Halfrine, and to thousands today, in the thousands of mining.
Yeah, absolutely. The hash rate is just absolutely insane, and just keeps going. So absolutely necessary to create digital scarcity. So you solve the Byzantine generals problem, then you solve digital scarcity. Pretty good couple months there.
Yeah, definitely.
So what do you think Satoshi would think about modern day Bitcoin 17 years later? I mean, we've got the layer 2 ecosystem, we've got ETFs and institutional government adoption, etc. Like this, it's kind of wild.
So I mentioned earlier that the concept of the Byzantine generals problem was considered impossible to solve, and then Bitcoin came up. And so whatever problems that people are criticizing Bitcoin about, or the Lightning Network is too complicated, or you have to balance, it's when you open a channels, it's you put it half a Bitcoin from one, half a Bitcoin, you can only send half a Bitcoin, all those things, and then you have the channels only for you, and then you have to open that with somebody else. And you have dependencies. Maybe eventually will be a bunch of banks that are the node, and you are directly connecting with the banks, or the banks hold their private keys, and then they're on their own networks. Because now it's only big bucks who can actually do the transactions on the blockchain. All those things do not consider again that we went from a system where PhD professor thought something was impossible to, in 2008, 2009, showing that, yes, that's actually possible. Whatever problem this current situation is with Bitcoin, I believe that in 10, 20 years, many of those will be solved, or things will be even more beneficial, easier to use, easier to operate. Progress is not done. And one of the things that is typical of people complaining about Bitcoin, mostly those with Monero and all that, is the fact that, okay, at the moment your public key is known, your Bitcoin address is known, everybody knows what's going on with you. These Bitcoin exchange, they know where you're transferring those, and it can be tracked by third party and so on. But I believe that too. Eventually, we'll have a layer 2 solution to those things, where we will be. You'll have the ability, because I think it's important to have the auditing perspective of Bitcoin with the Bitcoin address. What we have, everything is tracked on the blockchain. That is important. One of the things we know about Monero is like, okay, what if something is being hacked in some way, and they create many Moneros? Nobody will know because of all this opaque system. With Bitcoin, we are able to compute those things all the time, and so that's important. But a layer 2 and any form of layer 2 will be able to have all that flexibility that we need, and it's definitely just I believe in its infancy. Layer 2 would keep growing, and there'll be maybe we'll talk about layer 3 at some point, who knows, but definitely we're not done.
Excellent.
Maybe we tease out the second edition a little bit more. Was there anything that these are, like you said, new emails were surfacing as a result of some of these other situations? Was there anything you saw in those that was like a light bulb moment, or made you interpret something else differently, or what would you say there?
Well, a couple of things, interesting conversation between Mike Hearn and Satoshi, but also Marty Malmy. And what I found interesting is Marty Malmy really helped Satoshi. And you notice that Satoshi was extremely grateful for his help, because he worked on the website and work on the FAQ and all that. He's just Satoshi shared a big FAQ of a bunch of questions that people sent him. He grabbed those things, and he's just forward an email to Marty, who actually built up a FAQ based on those things. But there was also, he worked on converting, I think. He helping the software for at least on the Windows side, and a few bugs and those things. And that was how grateful he was. It was cool to see. That's the reason why I feel more like this is a single person, that he was already busy with the Bitcoin core, didn't have the time to do all those little things. And if they were more than one than just Satoshi, but something else, more than one, then those little things could have been taken care of by another team member if there were more than one Satoshi. So it feels like there's a single person, basically. Just I did not had fully that's firmly this belief before the second edition, but you know, I have a little bit more of that belief now with the second edition.
That's a very cool observation, and it makes sense. Yeah.
There are people out there who have proposed that it's multiple people. So that's
Yeah, I know, I know.
addressing that point. Yeah.
But like I said, when you read it from a neutral perspective, you start reading those conversations with Marty and Melanie, and it's like, you know, if there were more than one, you know, I don't see how you would have those conversations between him and Marty.
Yeah, I don't buy that theory at all either.
And I've always thought the people proposing that it's more than one person, a team of people, they did it more so out of, oh my gosh, that so much was accomplished that we think it must have been a team of people, but that's not exactly like hard proof, you know?
Yes. Yeah. But, you know, like great people, great inventors and all that, they've done that by themselves. You know, Nikola Tesla, he had all those big minds, and his mindset was great, and he was able to come up with those things. He was alone. And so it was Leonardo da Vinci, you know.
Yeah. All right, get yourself the Book of Satoshi, and then get yourself the Book of Satoshi second edition. If you want to hold that one up, Phil, we'll have both at the same time.
Definitely.
Both of them available on Amazon, you know, or where you can find them other places if you're anti-Amazon, but it's so damn convenient.
Bookofsatoshi.com has the direct links to the Amazon link.
There you go. And I just bought mine today, as soon as Phil told me 2 minutes into our pre-show here. Insta-buy. That's why I love. So I'm excited about it. Thanks so much for joining us today, Phil. Happy White Paper Day Eve to you.
Thank you.
Thanks, Phil. That was great.
All right.
Really appreciate your time. All right, we are going to jump into the week's news after we have said goodbye to our special guest.
That was pretty awesome. I loved it. I absolutely loved it. It's inspiring me to go back to some of the content and definitely check out the second edition. I'll just add one more thing that was coming back to me as we had that conversation. I was like being, reminded of what I felt like reading that book the first time. And one feeling I definitely had was reading back and forth between Satoshi and someone else, which is what most of the book is, right? And there were some topics that were more complex about like 51% attacks, like DDoS, like all these other things. And I remember reading someone propose like, hey, the system might not work because this, and this. And they had some long post, and I would read it and I'm like, I don't have a computer science background. I can't totally understand that, but that seems like a legit concern.
Right.
And then I would read the Satoshi response, and his style of communication, I think, was like phenomenal in terms of, what's the expression? The true sign of a master of your field is, can you explain it to a fourth grader or something?
Yeah,
like that?
Just like what we just read about the Byzantine generals problem, and laying it out in a way that you can understand, and it's almost a story, right?
Exactly. So that was my takeaway. I was like, Satoshi responds to all these difficult claims and complex claims with very clear language, so that I was always like, looking at the two, I was like, oh yeah, that one makes more sense. Maybe you could say I'm a little biased because I saw the name Satoshi next to it, but right. I think he had great communication style. Yeah,
he carries a certain gravitas for sure. Okay, well, let's run through the week's news. Let's see. We'll start so we got rate cuts today. That was today, right?
That was Wednesday, yesterday.
Yeah, yesterday. Okay, so this was expected, 25 basis point cut. So where are we now? 3.75 to 4%. It already feels like we're starting to get down to like real rates. We were up at 6% not too long ago. So this feels significant, like a 30% cut.
Yeah, apologies if you're hearing background street noise here. It's
New York,
part of being in the city. I never know how loud it comes across, but if it's really annoying, just tell me to mute. But so they cut 25 basis points, and we're going to hit all these news items pretty quickly here, just because we did 45 minutes with Phil. So 25 basis point cut. This was expected. If you guys dig into the board of governors who all vote, there was one guy who said no cut, and then Stephen Mirren wanted 50 basis points of a cut, and then everyone else said, yes, let's do a 25 basis point cut. So that led to the 25 basis point cut. The other big thing is that the Fed is ending QT, quantitative tightening, on December 1st. That means their balance sheet is no longer shrinking starting on December 1st. They're also going to change the composition. So mortgage-backed securities will continue to decline, but they're going to reinvest those proceeds into T-bills, and enough such that the balance sheet is likely to begin gradually increasing. There is a huge debate on Twitter over, is this QE? It is semantics. There is no absolute definition of QE. Some people just say if the Fed's balance sheet is going up, it's QE. The Fed is always going to be inclined to not describe it like that. They want QE to be reserved for post-GFC activity, post-COVID activity. That's what they're going to call QE, large-scale asset purchases. Again, this is semantics. So you'll see people arguing it both ways on Twitter. I think that kind of covers.
The phrase was basically introduced right after the Great Financial Crisis, or during the Great Financial Crisis. Like this was not a phrase that was used before. So it seems like they needed to invent a phrase to describe something that hadn't happened before, not very often, and so they needed to create a new word. So it seems like it should stay like that specific definition, right?
I think so, but then I am sympathetic to the view that it's like, hey, the Fed is buying assets. Anytime the Fed buys assets and increases their balance sheet, it is some sort of easing.
Yeah.
I personally like the people who say QE is large scale asset purchases, then like, why don't you just use the term large scale asset purchases?
Yeah.
To me, QE is balance sheet expansion. Everything else is just kind of semantics. But on the market impact, JP Morgan Research, someone in their research division, had a great quote, which is today, they're doing this yesterday, today will be the 5th time that the Fed cuts rates with the S&P 500 at all-time highs. All prior instances, the S&P 500 was higher a year later with an average return of 20%. The worst one-year return in this 5-instance data set was a 15% gain.
Wow. And
that is the past, that happened last year.
Wow. That's pretty wild. What do we got here? This is the 5th time that the Fed has cut rates.
Yeah, this is what I was just quoting.
Yeah, exactly. So here you go. Yeah, tease you up.
Yep. So that's the image that I was just explaining there. And I'll just underscore something we've talked about on the show in the past. I have a really hard time seeing where we're at right now being analogous to November of 2021, like a peak in Bitcoin. Markets are about to sell off, and we're going to have a total risk-off year in 2026, like we did in 2022. I really don't see that being the case. Like, so many of the pieces are different right now.
Yep.
So a lot would have to change in the markets for me to start thinking that we peaked at 126K Bitcoin.
Yep. All right. Next up is a tweet from John. This is great. Go ahead.
Yeah, so this is it's good to cover it now since we're talking Fed and balance sheet and stuff like that. So you can go to the Fed. One of the nice things about the Fed, I will say, is that they do have some pretty great data available, and they summarize it in some pretty nice charts, and they're easy to just look at what the balance sheet looked like, composition. So these lines you're seeing, these different waves there in different colors, those are treasuries that they hold based on maturity buckets. And that light blue one at the top is treasuries with a 10-year or longer maturity. So what we would call long-dated treasuries. Since the GFC, the Fed has never reduced the amount of long-dated treasuries that they hold. I did not misspeak there. I'm not talking about in the last year, the last 2 years, literally in the last 15 to 16 years. Since they started increasing that bucket of securities, it has only increased. So what that means to me is, you get a lot of people who say, oh, why didn't the Treasury issue a ton of long dated debt in 2020 and 2021, right? Interest rates they could have done it at 2%. They should have done 30-year. They should have done 50-year. And the reality is the Fed was buying a ton of the existing 10-year and 30-year paper. I don't think there were enough real buyers in the market to say, yeah, sign me up for US Treasuries with a 30-year maturity at 2% or whatever it was. And I think if the Fed has not been able to reduce that bucket of holdings for 15 years now, I think it's highly unlikely they're going to reduce it in the future. This doesn't mean they're going to do massive QE tomorrow or anything like that. But I think this like gradual currency debasement is baked in the cake. Like that's a given. And then if there's a big crisis, that's when you see gradually, then suddenly.
I think one of the things that's good about pairing up the two of us is that you're an expert on this stuff. I am coming to it through Bitcoin and still coming up to speed on all this stuff. So doesn't that like not square with quantitative easing? That the fact that those long dated treasuries, I mean, they're effectively selling. Anyway, it doesn't seem to be consistent with a QT environment. Maybe I'm wrong.
With quantitative tightening, yeah. So basically, if you just look at that bucket of securities, they've been increasing their holdings. What they have been reducing is shorter dated treasuries, mostly T-bills, but some with like a 3-year, 5-year, maybe 7-year maturity. They have been able to reduce that bucket. And think about what it means when they reduce that bucket. It means they're able to let those securities roll off and the Treasury can issue new securities there, and real buyers, meaning not the Fed, will buy it.
Right.
But they haven't been able to do that with long dated securities.
Just because there hasn't been a market for it, effectively.
Yeah, I think that's kind of the dirty little secret. You will never get a central banker to admit that, but I think that's the dirty little secret. So QT has been happening for certain maturity buckets. Yeah. QT has not been happening for longer dated US Treasuries.
All right, cool. So, hey, see, I'm maybe getting this better than I thought. Okay. Here we have inflation has been above the Fed's 2% target for 56 months now. Over the past 4 years, inflation has averaged 2.4% above the Fed's target. And they just cut rates last month and they cut again yesterday. The 2% target is gone. What do you think about this claim?
Yes. Shout out to Robert, who's infra on Twitter. He does a lot of good macro content. I think speaking of what we were just saying, how there's certain things that you can observe, but then the Fed will never admit to them in a public statement. This is in that category as well. You probably won't see them abandon the 2% inflation target, maybe ever, or not until well after the fact. Like, a decade from now, they might be like, all right, fine, it's 3%. So it's going to be one of those watch what they do, not what they say. They will always, at least in the near term, say they're committed to the 2% inflation target. Mm-hmm. But they're about to start increasing their balance sheet again. They're cutting rates, and inflation has not stabilized at 2%. So watch what they do, not what they say.
Yeah. Trump met with Xi today, I believe, or, 5-6 hours ago, today in China. But the meeting's over. And Trump said he called it a 12 out of 10, in typical Trump speak. They talked about fentanyl tariffs, reducing it from 20 to 10%. The overall tariff rate decreased from 57 to 47%. Rare earths, China agreed to pause strict export controls on rare earths. Rare earths obviously are crucial for technology and manufacturing. Agricultural trade, soybean purchases, China committed to buying 25 million metric tons of U.S. soybeans over the next 3 years. Future engagement, Trump plans to visit China in April 2026, while Xi is expected to visit the U.S. later. Both leaders expressed optimism about their relationship. Trump gave the meeting a 12 out of 10 on Rotten Tomatoes. All right.
I think you nailed the summary. Those are like the key bargaining chips at play right now. And anyone who's been following trade, tariff stuff long enough, you know that you can't take any headline too seriously. This is a positive headline. Things are easing, which is interesting because that to me implies that other things are moving markets right now, because this is a positive trade headline, but equity markets are selling off, Bitcoin is selling off. But this is things heading in the right direction. Again, you could see a headline next week that says, so and so reneges on their commitment last week, but for now it's a positive move.
Yep. All right. Mastercard is looking at acquiring Zero Hash for nearly $2 billion. The deal is not yet complete, but if it does go through, it seems to be a play on stablecoins for Mastercard, stablecoin infrastructure. So this is, it makes sense. You've got to roll with the times and modernize your business. Stablecoins are proving to be a very successful business, as we know. So this is an interesting move by Mastercard.
For sure. No, that's a good summary. And we just wanted it in there as a quick hit. It's Zero Hash is not going to be an entity that any of you listening have used. They're a B2B infrastructure player. But we did think it was interesting. Just Mastercard is a massive, massive incumbent, right? And if they're getting into stable coins and maybe a little bit of crypto services, you could see them potentially after maybe they'll focus on stable coins for a while, but I think them getting into a company like Zero Hash could pave the way for them being like, oh, Bitcoin payments is an interesting thing. I'm not saying that's coming soon, but down the road, potentially.
All right. This is interesting. You highlighted this in the Slack channel. Nvidia is now manufacturing in Arizona. Why is this a big deal?
Yeah, so this to me is a big deal because if you believe, there's kind of a thesis out there of like, hey, everyone, we're in a totally different regime post-COVID, but also in a Trump 2.0 administration. And what do I mean by that is COVID revealed some really huge imbalances in economies. Imbalances in terms of trade, which everyone kind of knew about, but in terms of reliance on other entities, and supply chains were built totally for efficiency. And I think a lot of people realize we need them built more for resilience. We need to be able to source not everything domestically, but a lot of countries, including the US, realized, hey, we're dependent on other countries for pharmaceuticals, for ships, for industrial equipment, for military equipment. And again, it's never going to get to the point where you can produce everything domestically, but I think it was too unbalanced. COVID revealed that. And then Trump also has kind of a nationalistic mindset to fix some of these things. So I thought it was an interesting thing for the CEO of the largest company in the world. Nvidia just crossed 5 trillion in market cap, by the way. It was not that long ago. They were 4 trillion or 3 trillion for that matter. So
they used to be kind of a niche company, like graphics cards. It was basically for gamers, in like the 90s and in the 2000s. That's what they made. I was a customer of Nvidia way back then because I played video games on my computer and I needed a graphics card. And that was it. That's pretty much their whole business back then. Wow, what a change for them.
That's wild.
A nice new market opened up, you could say.
Yeah, I think that's fair. Real quick anecdote on that. I had a buddy of mine, very good friend of mine. We lived together. It must have been 2017 or 18. And his financial advisor was someone who we went to college with. And my buddy had a view on Nvidia being a good investment. He runs it by his financial advisor at one of these big name wealth management places. And in 2017, 2018, I won't even say what the firm is, but it's a big name. And her response was, it's a good company, but we really think it's overvalued right now.
Of course.
Because
never ask your financial advisor about these things. I asked my financial advisor about Bitcoin, about Tesla, about Facebook, about like all these companies that blew up. And he was just like, I don't know. Well, we can put you like a 2%, 2% position or something like that. And then I went in there and just cashed out everything that I had and put it all into Bitcoin. He thought I was crazy. And see him 5 years later on the street. He's like, yeah, I bought Bitcoin. You were right about that. Like, let's go.
And you know what? Like, if I'm going to give them a little credit from like, I'm just looking at the long-term stock in 2016, the stock was $1. This is based on like current amount of shares outstanding. Then 2017, 2018, it runs up to like $6.
Yeah.
So I think that's what those people, the professionals, were looking at. They're just like, hey, this thing's 6x.
Yeah.
I'm not going to recommend it to you. But the stock then went up to $30 in 2021, and today it is $200.
Yeah, I mean, come on. See, this is the thing. The financial advisors are always going to be more conservative. If you want to hit the home runs, you don't ask them about it. Just trust your instinct, your gut, do your own research. That's my advice anyway.
Yeah. And the thing, I didn't even say what the announcement was, but the CEO basically, he said, last week we manufactured the most advanced AI chips in the world, in the most advanced fab in the world here in America for the first time. So I think that does underscore that there really is a move to bring manufacturing back to the U.S., industry back to some extent. I'm not claiming the U.S. is going to create every widget in the world, but there is some movement to bring these things back. And this is proof that it's actually happening. A little caveat would be just doing light research on this was there was still some like final assembly and packaging and some other steps that took place outside the U.S. But apparently most of the production for this chip did take place in the U.S.
Yeah, it's a national security issue. Like we need to be creating these pieces of technology that are critical to AI and other critical technology. Like if we can't compete, if something happens, we've got to be able to make this stuff here. So I think it's a good thing, and brings jobs, good for the U.S. economy, of course, all that.
Mm-hmm.
Okay, so last one, quick hit. S&P rated MicroStrategy a B-, same as a junk bond issuer. From the S&P report, they explained, because most of the company's assets are in Bitcoin and its Bitcoin holdings are likely to continue to grow materially, we are likely to continue to view capital as a weakness. They've got too much Bitcoin. Is that basically what this boils down to?
This is a funny one. On the one hand, it's positive because they have A rating. The three big rating agencies in the world, for anyone who doesn't follow this regularly, S&P, Moody's, and Fitch. So S&P has given them a rating. There are tons of investors in the world who cannot buy a security unless it has a rating. To be clear, two massive caveats though. MicroStrategy securities still do not have a rating. This is an issuer rating, which is going to come first. It's just, another brick in the road here. So it's progress, but it's an issuer rating so STRC, F, K, D, all them, those do not have ratings at this time. I think they will in the future. That's caveat number one. Caveat number two is that B-, single B- is not a very good rating. It's considered high yield or junk. Those are synonyms. So anything in the double B category or single
high yield
B
sounds good to me. Junk does not sound good to me.
I know. And, it all depends on your perspective, but single B- is a junk or high yield rating. So there's still, most institutional capital does not allocate a ton to single B- securities. So again, huge caveats, but it's progress. And then the other funny thing that I saw in there, you referenced one quote, but there was another quote where it's like S&P outlined that MicroStrategy has a long Bitcoin, short dollar position, but they understand what the strategy is, right? But they were kind of saying it as not like we say that and we're like, oh, this is amazing. It's a great move. S&P was like saying it kind of neutrally or even critically.
Yeah.
So I think they have a lot more to go before getting on board with the strategy. And then one final comment is just, I think it kind of had to start here. If they gave strategy like an investment grade rating, that would have been just drawn so much attention to them as a company. I don't think they wanted to do that. It would have been coming out way too supportive of Bitcoin, given the history with it, meaning like TradFi not being supportive of it generally. So I'm not surprised at all at the bad rating. I think they're starting it here. We'll see what Bitcoin does in the next, 12 to 24 months. I expect them to increase that rating over time for sure.
Yep. All right. Awesome. Well, that concludes it for this week. I hope everyone has a nice white paper day tomorrow, a fun Halloween, and we'll see you next Friday. Thanks, John.